Good day. Ira Epstein of Linn Associates with your morning flash update for this Wednesday, and this is June 3rd, 2020, just after 9:30 a.m. Central Time. Wanted to wait a little today as I'm watching what I'm going to call a melt-up going on in the stock market. You got my word. This is an absolute, it looks to me like an early morning rush to own everything in the stock indices. Risk on is the word, which means the metals are getting hurt temporarily. Eventually, I would think that they get the bids back into them, all because if it's a risk on and factories are opening, you're going to get demand down the road. The dollar index down, which is driving foreign currencies higher at this hour. We're waiting to see the 9:30 EIA report on the energies. We're hearing that OPEC, we don't know if the meeting's on or off for tomorrow. It appears that there's questions about Iran and Iraq cheating, not meeting their goals, and that Russia and Saudi Arabia are unified in saying they've got to do it. They're not going to keep their production numbers to help those countries as they aren't meeting their goals. We're watching a good rally in the nat gas. Bonds and notes, again, I'm going to repeat, this risk-on mentality driving those markets down, and grain sort of waffling in all this right now. When we look at the morning data, the mortgage market headline, as we can see, the 71.7 is the index. That's down a bit versus the prior week, 74.65. We're looking at the purchase index at 296 versus 281.2, and we're looking at the refinance index at 3166.7, down again. So we're seeing a mixed bag here. The index down about 4%. The purchase index was up 5.3. That looks to me like the new purchases, and the refi down. Rates have been low, and now that they're creeping up slowly, people aren't refinancing as much. The market U.S. service sector PMI came in at 37.5, better than the last 36.9. Factory orders came in today down 13%, very close to what they expected, down 12.5. A little larger in the orders ex defense were down, and we're seeing all factory orders ex transportation down. But remember, this again was April. We know May things were slowly improving, and now that we're into June, it's even better. As for the ISM non-manufacturing headline, it came in close to what expected. 44, they got 45.4. You can go through these numbers as you see them right here. Look for gradual improvements there. But the surprise that none of us can quite figure out, we expected in the ADP number down 8.75 million, the reporting only down 2.76 million. That's an awful big discrepancy. This Friday, we're going to get our jobless numbers rate, and we'll see what happens. We're expecting 19.5 to 20% rate there. So interesting day. The question is the market going to lose this energy as the day goes on? Because it almost acts like a culmination to me early on in the day, this big run-up. Will it be able to hold as we go late into the sessions? And will you get a bounce back in the metals because of that? Those are the two areas that I'm looking at. Remember, if you'd like more information on what I think, what Lynn thinks, just go to our website, www.iraepstein.com. Look at the free offers, and you can sign up there. I'm Ira. You have a good day. I'll see you this afternoon with our market wrap-ups.